Buenos dias. Morning, everyone. Thank you for joining us for the PayFi panel. All right, so exciting that we have, four great panelists who are representing a lot of different components of next generation payments infrastructure on chain. So maybe, gentlemen, if we could start by just going down the line, give us a brief introduction about yourself and a couple sentences on what you're building.
I'm Nick Van Eck. I'm the CEO and co-founder of Agora. We launched a new US dollar stablecoin about 2 months ago. It's comprised primarily of overnight reverse repo, short-dated US Treasury bills. And so what's different from our model versus the USDCs of the world is that we actually believe that you should have an open model versus a single partner model. So Circle obviously has a one-off relationship with Coinbase where they share half the income generated from USDC, whether it's on Avalanche or Bybit, with Coinbase, who has many competing products. We actually think you should work directly with all the businesses, whether they're dApps like Aave or Benki or the exchanges, custodians, whomever, and say, hey, it's actually your business and your users that are driving income to me, so I'm going to give back the majority of it to you. And so that's what we do. We KYB businesses and then share 50 to 80% of the underlying income with those platforms. So we launched on Avalanche about 2 months ago, have 100 million in weekly volume, and have some exciting announcements coming this week and next week.
Jeff Handler, co-founder and chief commercial officer at OpenTrade. So my co-founder and I used to work at Circle and Coinbase launching USDC back in the day. And one of the main things that we saw from exchanges, neobanks, other folks providing stablecoin accounts was they want the ability to earn interest on high quality, stable assets and be able to offer that interest to their end users in really easy to use apps. And so we thought that was a really good idea and went ahead and spun out a new company to build exactly that. So we allow exchanges, neobanks like Littio and others to very easily earn interest on their stablecoin balances backed by things like treasury bills, investment grade trade receivables, commercial paper, and then they can offer that as savings accounts or other interest-bearing products to their end users in a really seamless way, no additional onboarding requirements for us, just works. So yeah, that's us.
Hi everyone, Ivan Torroledo here. So I am the co-founder of Littio. So at Littio, we help businesses and individuals to make transactions cross-border between the US and Latin America. So a bit of my background before, I started in the traditional landscape of the industry. I was working in central banking before. So I moved to crypto 5 years ago. And I'm trying, at Littio, we are trying to close the gap between the traditional industry, the financial industry, and crypto to create use cases that are useful for people to solve a real world problems, things that they need to solve for the day-to-day.
Hi everyone, Rick Golubov at Franklin Templeton Digital Assets, and we're in a really unique spot at Franklin Templeton. We've been building in the space, basically behind the scenes since 2018, 2019. We're involved in some really exciting projects within Franklin. We have a node ops group, we have a blockchain VC team. We're building out separately managed account portfolios and building out model portfolios for advisors. And then our project that really kicked us off and put us on the map in terms of an asset manager, we were the first asset manager to tokenize a public security and put it on chain. That's our Benji token, which is a US government money market fund. So we've been proliferating in the space for quite some time. And we're really pushing forward industry standards and some really unique innovations of how we're looking at utilizing blockchain technology to create efficiencies within traditional financial assets. So we recently launched on Avalanche, so we're super excited about the community. And the Benji token is a US government money market fund. As Morgan mentioned, you get a money market fund, you get a money market fund in our presentation. We're really excited about the future capabilities of utilizing a money market fund on chain and what that means to clients and what that means to individuals throughout the whole globe. So excited to be here and excited to be in front of you guys.
All right, thanks guys. So would love to start with a bit on the current payments landscape. So what are some of the pain points in the legacy systems that you think that blockchain-based solutions can address? Maybe Ivan, if you want to take a first pass on that one.
Thanks. So I started the company 4 years ago because we were seeing a gap between the products, the financial product that you can get being in Latin America or in developing countries compared to the ones that you can receive in the US or developed economies. So we saw that opportunity, that gap for consumers. We are like a real consumer app for Colombians. And we found out that crypto, blockchain, it's a way to close the gap, to build like a bridge between those two worlds that are not connected, maybe now are being connected more and more. So that's why we see a lot of opportunities there, connecting. For example, we started offering dollar accounts for people in my country for mostly receiving and sending payments to the US. And that's really hard being done with the usual product, traditional banking. It takes like 7 days. It's really expensive. So we created a product that is able to do that like in real time most of the time. And it's like 50–70% cheaper than the traditional solution. So that's why we see that there are so many things happening in crypto that could solve so many problems in the banking industry. And one of the things that we are trying to solve is this about cross-border payments and getting access to other products like investments in the US, something that we have been doing with OpenTrade. So that's mostly.
Great. Anyone else from their kind of vantage point want to add anything?
Yeah, I think one of the biggest issues is cross-border payments, right? Whether you're an individual that wants to move money back home, it's really expensive and it takes a lot of time, or if you're a business, it's nearly just as bad. An anecdote that I like to share is, when we were raising our seed round, we actually took investments from people in APAC, and one of the wires, it took 12 business days, and then the second wire, it took 20 business days. And if you're like a business that's operating and moving tens of millions or hundreds of millions of dollars via different jurisdictions, different banks, like that is not really an acceptable way to operate, but that's the status quo. So I think that's why you're seeing stable coins and payments really be this first stepstone for sort of traditional businesses moving into crypto, right? Because it's not just 10x better, it's 100x better than the current system, because you can say, okay, I'm gonna move 10 million AUSD from my account in Colombia to Singapore, I see it in the mempool, 10 seconds or 1 second with Avalanche, it's done, right? And like, the status quo is, okay, this could take a day, maybe it gets lost. And oftentimes people, if you're closing something, you need to get it done that day, and sometimes the wire misses, or the bank holds it up for 2 days and collects the interest for themselves, and so it's 100x better, and so that's where we're seeing, and then EM latent dollar demand, right? So people just want to hold dollars.
Totally. Go ahead.
Yeah, I mean, I think that the technology in crypto is really just a tool and a piece of this, right? Where ultimately the really exciting use cases that are happening in this company are actually happening today and being used by tens of thousands of people. So if you take Littio, for example, and I'll use some data that I got from one of Yvonne's lovely blog posts. If you're in Colombia and you want to open a US dollar account, good luck. The vast majority of financial institutions just categorically do not provide you access to those accounts. And even if they do, there's things like $5,000 minimum deposits, really opaque predatory fees that, really diminish the value of that. And so then we have fintechs like Littio, who are built by people in Colombia to serve people in Colombia, that allow them to, using USDC with as little as $10, open an app, onboard, and start getting and saving in dollars. And now, of course, behind the scenes, they're using USDC, they're using companies like OpenTrade to facilitate investments that can bring in savings, but the real innovation is using that as tools to offer these new products that really unlock unprecedented access. And the thing I'd impress upon people is that this isn't a kind of future, science fiction like type, thing that we can aspire to. This is happening today, right now, and making a big impact. So,
yeah, I'll just touch upon Jeff's comment about a tool. So, the notion of using these new concepts like a U.S. government, well, let me take a step back. A U.S. government money market fund is not a new concept. They've been around since 1971, proliferating. And I think the latest data point on money market funds, it's to the tune of $6.5 trillion in terms of total value for money market funds. And how Franklin thinks of, blockchain and this U.S. government money market fund, AKA the Benji token, as a tool. We created this token. We launched it in 2021. We created our own digital transfer agent. It is the source of truth for transactions on the blockchain. We created our own Benji hosted wallets that custody the token. But also the extension of using these tools, I think, is really unique in terms of what we're building, is that we recently launched peer-to-peer transfers within the Benji ecosystem. We have an institutional UI where members of finance, heads of treasury for crypto native and non-crypto natives are using it as a corporate treasury function. But I think the wallet infrastructure that we built could be really unique as a payment mechanism. The minimum on our wallet is $20. We're available to U.S. investors currently, but we are building out a global construct. So as our colleagues on the panel here, it's about giving clients choice and giving people access. And I think our wallet could potentially be that unique bridge to help clients in various countries get access to a yield-bearing token in a whole new way. And if you take a step back, you look at the peer-to-peer transfer piece, it's massive. Right now in our institutional UI, any Benji holder can transfer to another Benji holder. So institutions that are using our institutional user interface and have a Benji wallet can start sending their Benji tokens to other Benji wallets. To me, that's a very organic way of thinking about Benji as a payment mechanism or a payment tool. So that's how we view the world. We view the world as creating these unique opportunities by using blockchain technology, and especially our good friends at Avalanche. So we just think we're just getting started of using Benji in a whole new way. So it's not our parents' money market fund anymore. It's a whole new paradigm shift into this new digital asset future that we're all involved in.
Awesome. A lot of great stuff brought up that I want to dig into, and maybe firstly to the blockchain as a tool point. I think payments I think of as a value chain. It's not just about getting value from point A to point B, but you're enabling usability at both ends. Maybe then thinking about how does it get to point C, on and off ramps, utility for partners. So want to talk a bit about partnerships and composability in this context. What that means for payments. So maybe a bit more about Littio and OpenTrade. How did you guys think about partnering? And then maybe first specifically, Yvonne, designing a multi-product suite for users, how you thought about kind of bringing components together to address multiple needs that LATAM users might have.
So we started with a simple idea on offering dollar accounts for people in Latin America. That was a really good idea for that time in 2021. And we realized that people, they don't want only that simple or single solution. They want the whole experience for being able to use crypto as an actual tool for solving problems. So we issue a card in which you can spend your crypto, USDC mostly, with the card. So you can now, by that time, you were able to spend the money also not only receiving and sending, but spending globally. And the third step that we saw is that people also want to get access to investments in a real world assets that are valuable for them, but they don't have access in Colombia. So we partnered with OpenTrade to offer the solution on getting T-bills, treasury bonds from the US as an investment option, but using tokens and crypto as a tool to overcome the difficulty of getting this in the traditional way. So all of this is the history about how Littio is being able to create the whole solution, the whole journey for a user that is not having any kind of service in Latin America because they don't receive their salary, the payroll from Colombia, so they need to get from the US, so it's hard to receive the salary. Later, they don't get cards because they don't have history, financial history, so they don't want to issue a card for them because it's risky. And finally, because they know the opportunities outside, they don't want to get only opportunities on investments in Colombia. So they want to get options in the US or investment in the US or any other country outside. So I will say the relevance here is not only building a solution, a single like a feature is understanding the whole experience for the user to be able to create a product that is, in this case, is a consumer product that is capable of getting all this journey, this vertical integration. So that's why we use a lot of like partners that are creating like a really good products. That's OpenTrade, and that's something that helped us a lot. We increase retention, we increase engagement with our users. Users can understand that crypto is not like something crazy. Like I can see people like a 50-year people using crypto in the back without knowing really, because they understand that it's just an account, investments. But that's the opportunity that I see for crypto and blockchain. It's how you can share this technology with users that they don't need to understand always behind the product. So that's the good thing about our product. So Jeff.
Yeah, no, absolutely. I think that one of the best things about the partnership and kind of how it's manifested today is that no Littio end user really knows that OpenTrade exists, and they probably shouldn't. What they see is a really easy to use app where they have the opportunity to earn interest on their dollar accounts. They get transparency into what that interest is actually backed by. Read a little text, click a button, boom. They start earning interest on a dollar account in an unprecedented way. And so for us, that's really our partnership model, and the way we approach it is that we're not experts in terms of crafting a great end user experience for people in Colombia, and we don't aspire to be. There's great fintechs and apps out there like Littio who have spent years on the ground building these apps, building these great user experiences, and the end total, what it should really be is, again, an end user can open an app, get a dollar account, start earning interest, and they don't need to know how the plumbing works on the back end. They don't need to know about private keys, signing transactions. They don't need to go off of Littio and do a separate onboarding at OpenTrade. We do all the work in the background to set up the wires, but the most important thing is doing that so that end users have no idea that that's actually happening in the background, because they don't need to, and they just want something that works that they can trust.
All right, maybe from more of a B2B perspective, Nick, would love to hear a bit more about Agora's partnership-focused approach, what that unlocks for your partners. Like, is there kind of new functionality or other ways they can approach their business by working with you?
Yeah, so it's really, at the beginning, it's an access to new revenue, right? So you have billions of dollars of USDC, USDT on chain, and ultimately those businesses are not capturing any of it, right? So you can imagine a world where, when we launch on Benki next week, we're actually sharing the majority of the revenue back with someone like Benki, and then they can pass it through to their users. And so theoretically, any AUSD pool should always have a higher rate, assuming similar utilization, than USDC or USDT. But we can also work with B2B payment companies, right, who are using USDC, USDT today, and they'll say, oh, actually, if I just swap the asset, now I'm making money on this stable coin, even if it's in my wallet for 10 blocks, right? And so at the beginning, it's really opening up new revenue generation opportunities. But a large reason why we started the business is we viewed the USDT and USDC as rent seekers. And it made no sense to me that $8 billion was getting sucked up out of crypto into these two organizations, from the activities of all the businesses across crypto. And so what we want to do is ultimately power and push back 80% of that revenue to all these businesses across the space, whether they're on Avalanche or a centralized entity, or a Web 2 company coming into the space for the first time that wants to use stables to move money. And so that's really what it's primarily unlocking for these businesses. But there's also some interesting things that we'll be able to do in the future with tokenized treasury products, because we are issued offshore outside the United States and focused on the non-US market, that I think will be really compelling from a collateral standpoint and help activate a lot of these natively yield-bearing products like a Benki, and further their utility on chain.
Great. And kind of to that point, big picture, would love to hear about, what each of you is excited about from the perspective of composability and like what on-chain infrastructure unlocks kind of big picture for payments. Is this like next generation embedded payments, integrations with DeFi? Are there areas, new product capabilities that you're kind of focused on? What is kind of like the next like frontier, do you think?
Yeah, I think there's a lot of things, but maybe I'll just touch on something that's personally interesting to me, and that's FX. Right, so obviously we have a US dollar stablecoin. Part of our mantra is we don't want to compete with our customers, right? That's why we think the USDC Coinbase model is challenged, because it's a huge conflict of interest, right? Coinbase now has Base, a wallet, exchange, prime broker, custodian, and they're actually competing with everyone. And so, if you have USDC on Avalanche or on Bybit, half the revenue is going to Coinbase, who has competing products. And so we're actually working with a lot of different local FX stable coins that are coming to market, and we want to work closely with them as well as other market makers today that have a lot of flow, but today they only have one leg of that process on chain. It's primarily USDC, off-ramping into Mexican peso or Colombian peso. Well, now through companies like Littio and others, there's going to be local currencies that are on chain, and so building up those markets and working with the trading firms, fleshing out RFQ systems, and having that now all transpire fully on chain, I think is something that's going to come sooner than people expect, and I think is a really big opportunity within payments.
Yeah, I mean, I think it's so prior to Circle and USDC, my co-founder and I spent a lot of time working in something called trade and supply chain finance, so transaction banking, where a lot of the world's biggest corporates out there, they'll have a shocking amount of relationship banks. So they'll have 40 different banks that they use for different currency accounts, different credit facilities, different financing facilities, and basically there's an entire treasury department that has to kind of wire all that up and make sure that everything's going in the right place, and that's kind of composability or lack thereof in the traditional world. And so one of the things that we're focused on is I don't think that that's going to disappear anytime soon. We need those institutions, and that's kind of a foundational layer, but what we're really focusing on is Littio shouldn't have to worry about that. People that are building end user-facing fintech apps shouldn't have to worry about that. We can take that on as our business. So what we do is a combination of having dozens of relationships and accounts with financial institutions that allow us to move dollars, buy commercial paper, buy receivables, buy treasury bills, and then package that in a technology solution that's a combination of APIs, vaults on different chains, and making that composability incredibly simple for our clients, so fintechs, neobanks, et cetera, where, again, kind of back to the theme of, there's certain actors that should be there to kind of manage that plumbing and managing that wiring, and the key is doing that in a way that's cost efficient so that we can provide those services to our clients at a low cost so that they can then provide their apps to their users at a low cost, and using things like composability and technology to really abstract that for those end companies. And so I think there is a lot of things under the hood that still need to be wired up and that probably aren't going away, but there's an opportunity that we've seized and that other companies can do as well to have an understanding of how to put that all together and then package that into something that's really easy for companies to use to do the most important thing, which is offer really great services and products to users that want them.
Something that I have seen in my case, talking about consumer landscape, is that throughout crypto and stable coins, we will be able to provide more competition on the offering that users could have on products for FX, even credit, because currently users only can get access to the local markets for FX, so they go to their single bank to get this transaction done, and then they are charging 4 or 5% in a transaction from the US, or getting credit at a really high rate because they only have access to this particular institution. with crypto and companies like us, we are providing access to a higher and broader space in which you can get access from a credit, maybe from someone in the US directly, or maybe getting the FX because there is so much liquidity at a lower rate, maybe 1% or 50 basis points. And that's something that is really like something exciting for me, because it's how you can transform people's lives in Latin America, that is a hard region for living, with crypto, with solutions that are using technology that are actually solving those problems. So that's are the things that I started to see, and it's something that it's gonna become more and more like relevant in the future as we build solutions based on technology like crypto.
Yeah, I'll touch upon just kind of the narrative around plumbing. I think the plumbing is extremely important, and the fact that the beauty of all this from our colleagues on stage here is that clients don't necessarily need to know how blockchain works, or the same way you drive a car every day. Do you know the ins and outs of every single thing in a car? So blockchain continues to be this nascent kind of new way of evolving our lives, right? This intersection between AI and blockchain is really going to be massive in the coming years, and I think we're just getting started. I think we saw this GOAT token, was it the other day, the AI agent that created this new meme coin, which really was fascinating to see how that kind of took off really fast. But we can go on that another different tangent. But anyway, talking about just the plumbing, so to backtrack, the Benji token is this 1940 Act SEC registered digital asset security token. We started our journey, 5-6 years ago, and everything we do is in a regulated industry at Franklin Templeton, and we created, by request of the SEC, this Benji wallet, where we're still trying to figure out how to kind of scale it. But I think, if you couple that with our plumbing, right? We've built an institutional user interface where crypto native companies and non-crypto native companies are using our token and minting and burning, so subscribing and redeeming to the token within our UI, which is very elegant, which is very simplistic to use. There's a maker checker function. There's a minimum of 2 authorized signers that have approve or reject the transaction. No one person can approve their own transaction. So there's credibility here. Every transaction's on chain within the UI as well. So to me, that's a really unique way of an asset manager getting involved in the early days and really putting forth new technologies that we've built from scratch in-house. I give a lot of credit to our tech stack team. We've built a lot of the things in-house, and not to say that we're not going to branch out and work with partners and other user capabilities, but we've got something special at Franklin, and I just want to just touch upon the plumbing, the pipes that our colleagues have built, and then the pipes that we've built for an asset manager in the space of looking at using our token in a whole new way, from, as Nick said, collateral, settlement, payments. I think another use case, which is a quasi-payment, is if you're a VC company, you can start funding your portcos using our Benji token. You're giving them a yield-bearing instrument. So it's a really unique way to look at how this space is evolving, of using a traditional, security like a money market fund. But I always like to say this is just a whole new way of viewing this future. We've got some really exciting feature sets that we're really building out within the UI and eventually on this retail app. And I'll just circle back, right? Peer-to-peer transfers can really change the landscape of how we're going to evolve in this space. I truly think it's a really unique tool. It's only available on the institutional UI. We are migrating to the retail app soon. And as I mentioned, we're building out a global construct. So we want to be able to proliferate and engage with a lot of folks on the ground. As we start to onboard the next 100 million users, Benji and opportunity sets like that and stable coins have the opportunity to really create this new shift from traditional cash to this new digitized version of cash in a yield-bearing token way. So we're in a really unique spot as Franklin, and then as all our colleagues are mentioning here. It's really exciting times. So.
And if I could add one more point on the the FX piece specifically, because something interesting is, so we at OpenTrade can do cross-border payments, FX across different currencies, instantly at virtually no cost. The reason we can do that, though, is because we've been onboarded to JP Morgan, Barclays, cash accounts at Intesa, cash accounts at Lloyd's, and so that is possible through what's called nostro-vostro account banking, but that's because we went through the painful process of onboarding at over a dozen banks and setting up over a dozen bank accounts. And the elephant in the room here in a lot of cases is that these financial institutions don't want to onboard fintechs outside of the US. If you're a fintech in Colombia, if you're a fintech in Argentina, and you go to try to onboard at Intesa and get the account that we got, you're not going to pass their risk assessment. And the reason you're not going to pass their risk assessment is because your directors happen to be born in a country that they deem as high risk. And so what we're really focused on with that is, again, there can be players in the space that take the brunt of doing that work and doing the onboarding and getting that set up, who then say, guess what? We don't have those same onboarding and risk management principles. We want to work with companies who are founded by people in Colombia. We want to work with companies that are founded by people in Argentina, and really taking the existing plumbing that makes this available today and making it accessible to companies that are, frankly, barred from this system based on geography in a lot of cases. So it's an elephant in the room. A lot of people don't talk about it, but the biggest barrier in a lot of these cases are risk management principles that are based on, frankly, outdated modes of viewing, risk based on geography. So, yeah.
Totally. I think where the role of incumbent players and legacy rails, and are you going to have a system that is totally Web3 on its own, or do you have to integrate and bring in the traditional players, whether that's because that's what consumers are used to, or they still represent just the vast majority of the world economy. It's a really critical piece, as you mentioned. The last few minutes, looking ahead, would love to hear how each of you think about differentiation within on-chain infrastructure. So not competing with the legacy world where, as we've discussed, there are really significant benefits from building on-chain, but being a differentiated player within this ecosystem. So maybe first starting, because I think stablecoins are arguably furthest along in this way, Nick, how do you see the stablecoin landscape evolving? How did new use cases, do people focus in more niche areas? What does differentiation look like from your perspective?
Yeah, I think at least I'll focus on how we differentiate, which is, one, we have an open partner model. We're institutional grade, so State Street is our cash custodian and fund admin. And to Jeff's point, it's pretty much impossible to get very large or traditional banks to take you as a client if you're a crypto company, right? And so that's a big moat for us. And then I think also leaning in deeply with ecosystems. But from an infrastructure perspective, something that we believe in is, right, you sort of have the settlement layer, which is like AVAX, right? Then you have the issuer, the on-ramp, off-ramp, and then the application. And as the issuer, you are in the most strategic position, right? So something that we're planning to do in the coming quarters is have an on and off-ramp product, not just for AUSD, which we keep fee-free because we think it should be fee-free. They're called digital dollars for a reason, but also service USDC, USDT off-ramps at cost, right? So you have a lot of providers today, like the Bridges of the world, that are charging 20, 30, 40 basis points to on and off-ramp, and we can do that for much less, right? We are actually doing it for about blended 3 bips today. So that's something that we're also planning to do. And then that impacts everyone else downstream that's using these providers, whether you're a neobank or a fintech. And so that's some of the things that we're planning to do on the infrastructure side, but I'll just leave it at that, given we have a few minutes left.
It's all about open standards. Dollars and currencies need to be able to work from one place to another. We always like to think about HDMI ports. So, Sony, Toshiba, iPhone, whoever, everyone's able to offer the ability to plug in a cord, to plug in your, laptop, because there's an HDMI standard that everyone can use. And so whatever stable coins, and we have USDC now, AUSD, others coming on, are able to establish themselves a really easy to use open standard. That's what's going to take the day, but the way it's going to be delivered is through apps like Littio that make that accessible to actual people who are going to use those stable coins.
To complement that idea, I will say that stable coins that are, for example, dollar, euros, are really used for international purposes, I see an opportunity on creating local stablecoins for local use cases. So there is one happening in Colombia, one happening in Argentina. So that's another way to increase adoption of crypto locally for use cases that we may know. And that's the opportunity that I see, like how we can build technology that people can use in a real world use case. For example, I am really excited about this, another thing that is tokenization of real world assets. It's really interesting happening. Even these huge banks like a JP Morgan, they are chasing this opportunity. So I see that that's coming, and hopefully not only for the big players, but also the consumers, like regular people at the street, using crypto for improving their lives.
Yeah, I'll just end with, look, it's all about choice, right? We want to give clients choice, the ability to get access. It's all about these access points, and that's why I think Franklin Templeton, has done a nice job of building access points, right? You look at the Benji token, as I mentioned, it is available to US investors, both institution and retail clients, and we just want to be able to, proliferate and be more interoperable with the entire digital asset ecosystem, but also throughout the entire world. So I think as we look forward to a vision of the future, there's going to be an amalgamation of a lot of different strategies and products that will help clients get to where they need to be. If you think about a world that we're currently living in, most people aren't getting 4.7%, was over 5% a couple weeks ago. It's about the democratization of giving clients access and choice. And that's why something like a Benji token, which is a yield-bearing token that's regulated, can be used in a whole new way. So I'll leave it with choice and access, and that's the beauty of utilizing public blockchains like Avalanche.
All right, that's our time. Thanks so much, guys. Great discussion. And thank you all for joining us.